This is London with Bitcoin Spike and VIP Trader. We're going to go through the market close. What a rebound today. Way to trade. We're going to shout out to our specific VIP traders. Want to let you know, former hedge fund owner, private non-SEC, not financial advice. We're going to dig into the rebound today and discuss the close on Tesla, on NVDA, on Bitcoin. We're going to talk about the drop, the nice drop, and what guys did it do? Why did it do it? How could you have caught that drop? We'll discuss a little bit about our specific indicator machine learning. Take a look at the specific indications here on machine learning for the Bitcoin drop. Very nicely done. 3 minute, 5 minute, definitely of interest without a doubt. The larger you expand, I suppose the less aggressive you would be on that specific drop. Multi-time frame, as you know. Let me plug into the back, make sure that we are squared away for chats. Nice volatility today, and great to see you all again trading. That's why we're here. We trade. We look at equities. I'm going to tell you we're behind in terms of an 8 to 10 second delay. I'll go over the targets, the rebound, what it meant on Tesla particularly. We're going to look at those targets and the patterns. We like the open and the close of equities because it gives us more patterns, all right? Gives us more practicum in terms of the tactics that we deploy so that we can apply them over to Bitcoin, our mainstay, okay? The king of volatility. You can look at the last 10 years. And yes, the king of volatility is what we focus on. So we'll bring in and incorporate stocks. We will do that. We trade them on BTCC. It's a crypto exchange. It's from FINRA to CINFIN. It's legit. It is licensed out, allowing leverage up to 225x. What's up? Careful on 225x, without a doubt. Big word of caution. But yeah, we appreciate the opportunity to trade. We've got about 20 minutes here in the close, and nice to see you. In terms of the details, you guys want to look at Tesla? Let's look at Tesla. Now, in terms of the downside target, Tesla was a bit more friendly today. Without a doubt. What did she give us? She gave us, and I brought to the VIP in the back, without a doubt, we identified the head and shoulders pattern. We identified the 225.51 full completion down to the 100%. You got it. We identified this level of resistance. Okay, now what did we recoup into? This would be the big issue. Bears along the way down, you got paid. If you entered along with a swing up in the momentum, looking at that swing up in the momentum was an easy no, but did it occur? Yes, it occurred. The swing up in momentum for the throwback to that neckline. Bam, nice move. Now, if you just looked at our specific, and we're trading on the weekly lower pro line on fire and ice, boom, you got a 2.13% move. That was nice. The level engaged with precision. Way to trade. That's our fire and ice indicator. What's going on, guys? Way to trade. Now, the most exciting pattern that we saw is the following. It'll lay the groundwork perfectly for the discussion on Bitcoin. And in terms of this, let's talk about the following. Specific target apex of what? A descending wedge that fell out of such, and we're going to target what? The apex. You guys know that. We like to hit an apex target. What we're going to say is, in addition there to what are we looking at? As you're looking at a little bit of a give back here after that level of resistance across the top, we're looking at a bigger, and we're going to go through this. Really, what was the key focal here that we brought in the back? Let's go through that in terms of the headroom, just to recover and just to review what I brought to you guys in the back, so that you can see exactly what we were dealing with. This was the big issue. We can go through it here on the specific big screen. Let's do this. Let me see if I can get back into, this was it. This was the key focal in the market. If you were paying attention to equities at all, this specific chart right here, boom, what was it? You got it. Bam, right into where? That 23.6. That 23.6 hit exactly perfectly. That was the level of engagement of the bulls. Boom. Orders were waiting, and what happened? Rebound time. NASDAQ engaged at that top level, 23.6. Again, where is the most dangerous place? This is a chart back to VIP. Shout out. Yeah, and what did we hit? Right onto the 23.6. Bam. Up to the upside for a 1.19% recovery. Everybody on the news sources were talking about it, etc. Nice to see such. Yeah, bravo, way to trade. You got it. Now, in terms of that, what was the recoup move that we were looking for, that we were on alert for, not just for the recovery move? Nice to see the coincidence. Nice to see that confluence in terms of the move to the upside for the NASDAQ plugged in. okay, in terms of a momentum shift in, and to the extent that, guys, you're trading, okay, we're going to dig into Bitcoin and make all of this relevant, okay, in terms of a recovery move to a failed volatility equation here. This specific, we call them a bell pattern formation. It looks like a bell, expansion, broadening, descending, broadening wedge. You guys got it. In terms of, or a bump and run, okay? Note the bump and run aspect here. In terms of this feature, the recovery into this pattern, we would look for such, ideally, pay attention, ideally unobstructed. I brought this to the VIP in the back because this is a level of obstruction here on Tesla, without a doubt. Got about, what, 15 minutes, 16 minutes left to go before New York's going to close down. You understand failed descending wedge, divergence in terms of price line to pattern expectation, because we would expect this to ramp to the upside. So we're going to focus on this specific apex as a target, so it's a target hit, all right? That's a wedge tactic. That's our own, right? We have done a lot of work on that. In terms of the specifics, recovery to neckline and an unobstructed, let's just talk about it. If we look at NVIDIA up 1.23%, we have some implications here. 1.69% to the downside is Tesla, and Bitcoin kind of holding flat for a second, allowing us to talk about how the equities may read into our ultimate trading in Bitcoin. That's what we'll be looking at. Now, in terms of the recoup, ideally unobstructed into the specific volatility, expanding volatility equation. If you don't know why I'm focused on this pattern, then you don't know. And if you don't want to know, that's okay. I would argue with people behind the scenes who know why we focus on this pattern, that mindset will just cost you money. That's it. If you don't want to know and you don't have any kind of a level of extreme curiosity on why are we focused on these patterns, talk to Tom Bolkowski, call the guy. Encyclopedia of Chart Patterns. Ask him why you might be focused on this pattern right here. Okay, the most extensive empirical data set in terms of the last 4 decades of information. Call him. Contact him. Ask him why we might focus on these. You assess his empirical data over the last 4+ decades and just figure out from a standpoint of backtesting, why would we focus on this pattern? You got it, guys. You got it. Now, in terms of the specifics, and if you're a VIP, you know it. If you're not VIP and you don't know it, well, get curious about it. Get curious about it. Drive yourself in the market, okay, to a better place. In terms of the specifics here, I will say that we look for an unobstructed, ideally recovery to such, but what we're looking for ideally, while we're always on guard for a specific lead-in potential, when we have that expansion between bulls on support, the guys, the bears on resistance, the handoff, bull, bear. We got that 2 on each. Support, resistance. We want the handoff from the bulls, got it, to the bears, got it, to the bulls, got it, to the bears, got it. Boom, boom, out. What do we want? We want a lead in for what? A bump and run. Boosh. This is our lead in at that standpoint. Yes, and we oftentimes see a recovery into this. We are on standby for a value equation. Anything down and out of this specific area, what's determinative in terms of the recoup or not? We look for momentum. I'm just going to draw the line there and say look for momentum. Okay, if you trade enough of these, you've got a few other tricks up your sleeve. I just tell you that, but we're going to look at momentum. Here, in terms of the bottom right of your screen, you're going to see bear, bull, bear, bull. Okay, you're going to see that. And to the extent that you're, guys, able to reconstruct this, that's momentum, bottom line. You're looking at needing to have some momentum to complete the recovery back up into that specific broadening formation that we would call a bell, the potential bump and run. If you're not familiar with it, get Bolkowski, get on the train. Let's do this. Let's talk about the specifics. In terms of the, we're going to talk about the open tomorrow. We've got about 13 minutes left to go. Just want to cover some details in terms of that move. Obstructed, yes. In terms of the anticipated, guys, let's just talk real quickly. We're now situated in a descending wedge. We're going to talk about the NASDAQ. It's important. Why would it be important to discuss NASDAQ in the context of right now looking at the, I'm just going to tell you, if you trade a lot, you know this, right? You know this. Everyone knows this who trades a lot. First of all, is there a pickup at the 23.6? You betcha. You got it. 23.6 bulls are engaging. That's exciting. We like that. That'll work. That gave us an opportunity to play with some momentum and a recovery into Tesla. Boom. Nicely done. We'll talk about NVIDIA in 2 seconds. But in line with that 2% move, and once again, I'll remind you on the specifics for Tesla, what engaged the weekly pro lower line on fire and ice. Bam. Did you hit it? Did you see it? You had to look at it and say, I don't want the trade. Okay, if you didn't want the trade, that's fine. I understand. Understand one thing, as we talk about breakout trading, as we discuss it and the pitfalls of it, where do you want to short? Higher. Where do you want to long? Lower. Period. It can get very, very sticky if you're trying to short on the NASDAQ as we've broken out and are heading down. These shorts rule. They are, guys, it is the way it is. You want the higher entry. I say, well, I don't have it now. Well, you got some opportunity to participate in this zone today on several aspects of volatility from Bitcoin on over. And we saw conformance with momentum today. Quite nice to see that. I've made that prominent on the screen here so that when we're sharing charts and discussing things, and again, we have an 8 to 10 second delay. This is not for the purposes of you trading. This is to discuss the fundamentals of technical analysis as they apply to Bitcoin and what can we bootstrap in, what can we learn from equities during these highly volatile sessions, essentially portions of the sessions from the open to the close of New York. What's going on to all the VIP? Hope you're doing well. Now, let's look at NVIDIA. Let's discuss what happened on NVIDIA. What did you hit? NVIDIA hit the specific lower pro daily line. True? Fact. It engaged. If you had alerts set, if you are trading our Fire and Ice, our kernel derivative, guys, it's a highly calculated kernel derivative. It is on it. If you're looking at volatility, you're looking at, guys, a very highly calculated level that plays very, very, very nicely. Looking at the daily engagement, you got a phone call if you set alerts on the daily. We like the daily lines. You got a phone call today saying, hey, you're what? And we have it geared to where if you're going down and you hit the lower pro line, it's going to say up. That's the phone call you're going to get. You're going to get a phone call saying up. You have to consider it. You have to look at your overall momentum gauges. You have to look at all of your time frames, all of your oscillators without a doubt. But it's nice to get a phone call saying up, right? NVIDIA, daily time frame, lower pro line. That is awesome. Better than a bottle of champagne. VIP. I told you guys, why did I start VIP group? Because instead of like a bottle of champagne going out on Friday or Saturday night, I'd like you to set up a phone call. Set up a phone call when, hey, by the way, NVIDIA hit the lower pro line. She could say, sir, I'll work on that. Yes, sir or ma'am. Take up too much time. Looking at the specific here, though, that was the phone call you got on the daily. If you set alerts for Fire and Ice, lower pro line, bam. It was a nice engagement today. So, bam, we hit into, it's a good day, guys, good volatility. We like to see this, especially when our lines trade. You got it, and they trade frequently. You got to find the right time frame, the right setups, etc. Accompanying patterns. We always like a target, sure. Even if it's up or down, we want a target, then we want a pattern to get us to our target. Looking at this combo here from the lower pro on the daily on NVIDIA, paid, cha-ching, nicely done. The specific, and let's incorporate this into Bitcoin and our crypto. The specific, as we look at this, the specific weekly, okay, that was on NVIDIA, the specific weekly on Tesla, lower pro engaged, ba-boom, cha-ching, nice double hit. And if you traded this specific move to the downside, that head and shoulders, you had a rock and roll good day. That's what we like to see. It's like what to do, guys. That's the way to be, VIP. In terms of the details, let's talk about the differentiation for Bitcoin. Rocked and rolled up and out early. Then what did we get into? Then we got into some really, really unfavorable. I'm going to go ahead and pull this up. Look at the background color of your screen. You see that it's red, and please look at this on a big screen TV. Not for me, forget me in the corner, guys. You can see the pictures, VIP in the top. That's what's up with VIP. There's the superstars of the group, guys. You know that. But looking at the red background, that means that we're dropping on momentum. You got it. So in a situation and circumstance where we have a nice pattern to work with, what do we still need? We still need on any pattern, it doesn't go without saying, we just don't say it much, we still need the momentum to shift and run to the upside. We just do. We agree, right? We got that on this underlying pattern. You can see just skyrocket, boom, nice work on the momentum to the upside. So on this micro pattern, first of all, on the watch list, guys, or on the list of cautionary patterns is anything ultra micro. The smaller that it gets and you're trying to master it, make a big move and really hammer into a smaller pattern, we've learned to be very careful. In addition there too, we see this rolling over of the momentum. Nicely done. Nicely done. Instead, we will say, we're currently parked back down underneath. Just to cover real quickly, the 20 moving average. Yes, with some dropping or falling momentum on the daily. Aware of such, we did push up, and the daily was looking like it was going to turn around, though this specific cyclical indication here of the momentum has maintained without a doubt. We hit into where? What did we hit, guys? That golden short line. We respect it. We pay attention to it. The golden short line on the 4 hourly. And amidst that drop in momentum, it was just too much for the bulls to handle on Bitcoin. So is there a potential recoup? Potentially. What will we need to get up and over this line of resistance? Well, we will need momentum. That's just it. We're going to call it like we see it. Now, let's dig into any additional framework that we'll be looking at tomorrow for the open, okay, on NVIDIA, which has been a wild day, a nice day. Even on the diamond, it was a clean diamond. You know this, it was a nice clean diamond. We had the constriction symmetrical, dual-sided. We stuck out here and below, came into the formation. I'll challenge you to look for these. Please pay attention. Look at the specific micro bull flag. This micro bull flag can be an absolute rocket ride. If you find them, you wouldn't at first notice it, but take note. Anytime you are shuffled and compacted into a specific micro bull flag, boom, you will see them run. You can see them run, so pay attention. We're going to do an additional are we going to knock this bear flag off the map? I think we have to. Why would that be? Let's take a look, guys. Let's take a look. What do we got going on? Here is a better, not perfect, but it's a better cup and handle. We agree? Yes. Now, we understand where the NASDAQ is. It's just recovered to that 4 hourly preceding bottom line support on the macro after the breakdown, and we're looking at what? And on the daily, we're looking, not quite a recovery, I believe on the daily. We will review that. Looking at the specifics, though, shorts are engaging. I'm telling you, if you are at a flat bottom support with a breakdown, if you're a bear, you are hammering down through the floor on those at a flip around confirmation. That is your signal. That's your entry, okay, on a bear front. Now, in terms of 5 minutes left on New York, we have this pattern in play on NVIDIA. Is it something we can just trade on open short? Any specific, I would say this, compromise, flat bottom support. We normally don't like to set flat bottoms on the way up. Normally, we don't like to set flat bottoms on the way up. Any internal pattern that might give us a bit of a, let's say a bit of a reason to stay bullish on this might be a bit of an expansion in this zone. We're just really heavily consolidating. I saw a bit in the price action that did incline me to think that there was a little bit of program pricing going on, okay? We pay quite a bit of attention to any time we don't have strong, let's say, indications of clear trend lines, and when things start to really morph around and really bend around and kind of ball up into some price action that looks rounded and this and that, just unnaturally structured. We're on the lookout consistently on Bitcoin for that in terms of potentially structured pricing, in terms of potential, we would just say potential just programmed pricing. So I've seen a little bit of that in NVIDIA, okay? I've seen a little bit of that, just that lackluster, just something we really don't like to see on something that we're trading. If we see it, we're on alert for it. I would say this here. I don't like to see this specific dynamic here where we're cutting through these specific angles as such, the curvatures just, and the more that we get this rounded, pushed and shoveled and this and that, guys, with a small breakout up and over, the more that we get this in a compact zone, I'm a little bit more wary. We've learned to be a little bit more wary as we traded Bitcoin and see that. It's just a red flag. Like things could go sideways here quickly. Pay attention. So to the extent that there is a correlation or otherwise, or we see that pattern dynamic, we're going to mention it. And when we see it, because this group, you guys know it on Bitcoin without a doubt. When I say that on Bitcoin, it's like, be prepared. Who knows what could happen next. So be prepared for the unexpected. We do not have I would say we don't have particularly a nice ascending triangulation here. We don't. At best, we have this cupature and this handle. In terms of the risk assessment, we are in a risky zone right now. Let's look at the weekly. We want to look at the weekly on And this is going to be the crux again. Remember, the last 2 days, the level of engagement has been what on NVIDIA? Has been multiple contacts into the 20 moving average, okay, have paid well. And I mean, they've paid well, guys. Been relatively precise, lower time frames have given you that structured entry. So when we're looking at going long on a pattern that could do well on NVIDIA, with a particular curvature and handle, we have to be cognizant. You'd have to buck the trend. About 2 minutes left until New York closes. Nice action today, guys. Way to trade. But we have to be cognizant that that specific top side, literally being underneath that band, but that top side level of resistance that's very, very evident immediately above us. And if you will just see, big screen TV guys, you'll be able to see this. But if you see exactly where the 20 moving average is, do you see? I'm on the weekly right here, that 20 moving average, which has been just paying like a slot machine. You guys got it. Look, it's engaged again at the 20. So here's a unique circumstance. If you see this specific 20 moving average on that weekly, now just pay attention to that top left specific chart and look at the crosshairs. You see this? You see the crosshair on the top? Do you see where it is? Yeah, it's right here. You see that? Do you see the 20 moving average below on the weekly where we just were? You see that shared crosshair? Yeah. So what it's going to push the bears overnight who say, okay, fine, I'm going to hold this or I'm not going to hold this. They've been paid multiple times on this. Nice, tricky situation to throw the bears into who want to own this level. They're literally thrown into a risk equation right now. They just are. It's not comfortable to hold that with the guys with the framework for tomorrow's open and looking at the pattern that we're looking at. So if you're a diehard bear, you've already thrown into that level multiple times. You know this. But whether or not you carried over, you tell me how that works out. Advanced risk equations in play. I'll tell you, and you know, with the NASDAQ looking like this, ouch, what a nice open tomorrow and a decision. You a bear? If you're a bear, hammer it, right? How can I convince you otherwise? We have some dynamics, some bullish dynamics. You know, we've discussed this. It would take a nice, proper momentum consideration and follow through to hit into these bullish patterns and really lay some dust to the bears. So that is our finish out on the New York close. Great situation. If it's clear, I'll tell you guys, this is clear sailing. I see confirmation everywhere. You guys know this. If I see it's confirmation everywhere, look, momentum is up on every single time frame. You'll know. There goes New York, our signal. It is closed. But taking a look, understand if I see something that's clear, we're going to say, hey, we're in the clear. For instance, as you look at whether or not we're in the clear and you'd like to argue it with me or you'd like to discuss it further and it's clear to you, it's not clear to someone else, pay attention. As you were to look at Tesla, could you be any less clear? Let's look at this on the weekly. Let's look at this on the monthly, okay? Now, we had that specific weekly lower pro line underneath the weekly 20 moving average on Tesla. Bam, rocked it, didn't it? It rocked it, right? Along with what? Along with, and really as a save provision for the monthly 20 moving average. True? Oh yeah, very nicely done. Very, very nicely done. Impressive to see the technicals at work. Now, this is the framework, and if you want a clear answer, I'm going to say this. If you want a clear answer in terms of where we're at and where we're going, oh no, and it's very clear. It should be clear to everyone. If you're thinking that right now, you flip the script just a minute. Look, that we are under the specific 20 moving average on the weekly. We are over the specific 20 moving average on the monthly. So as much as you're going to have the bull versus bear fight, and you say, well, we're slanting up to, we're upward sloping on the weekly versus, our angle of attrition here on the monthly. Come on, guys. You are being reinforced by the bulls and the bears. That's it. That's it. Sayonara, case closed. You're under a level of potential resistance on the weekly. You're over a specific potential level of support. Okay, both have engaged this week. So you literally have people guys in the market duking it out over, are we going to get a long or are we going to get a short? You've gotten both. What a great trap here in terms of the ability, just laser guys guided into this, just in terms of our technicals and guys, the proficiency at work. It's nice to see you dedicated traders, the ones who are dedicated. It's nice to see you have just this level of proficiency in the tools that can really enable you to capture this. It's just nice. I'm excited about that. Number one trade group. I say that because I'm in it, and I say it because you're in it. That's it. That's all I need. I wouldn't be in it otherwise. So it's nice to trade with you guys. Now we can go through the details. We'll look tomorrow for particular specific cap line. Okay, on the 4 hourly, we're going to be watching that. Make a note if you can. Make a note on the 4 hourly and potential cap line. Make a note on the specific hourly. Okay, on Tesla for the 20 moving average, noted. We are up and over and have a target to the upside on the specific 15 minute. That helps, right? And we have this dynamic in play. We'd love to see this bell formation rock, bam, to the upside. Noted with an obstruction. We don't always have this type of an obstruction. This obstruction is the equivalent really on the NASDAQ. Oh, you guys got that right. It's really the equivalent of this when we look at this specific, just being wedged in and out. I'm going to tell you guys, when we're underneath a 20 and we're over a 20 on the weekly and the monthly on Tesla, and you've got literally just the greater weight of both sides hammering through and trying to push in each direction, you got it, guys. It's good. It's a good battle. It's good. We wanted to be here. Where would we really like to be? I'm just telling you, where would we really love to be? Honestly, we'd love to be right here on the NASDAQ. We'd really love to be right here. You guys know this. We'd really love to be right here. Why is that? That's bearish. Well, I'll just tell you, the move from here to the level of resistance is a nice move. It's a nice move. It's a ride we'd like to take. Say, well, we'd just like to take a ride up here. But lower prices command higher percentage gains. So we don't want something that's falling off the cliff. We don't go deep diving for things that are down 99.99%. That's for the birds. We like lower prices to the extent that that same amplitude measurement will provide an additional alpha to us in the market, just compared with a standardized move above, right? And it's the maxim that, what is it, guys? $1 on $100, okay, is 1%. $1 on $10 is 10%. So the same amplitude move as you walk your way up in price becomes more relevant the lower that we are. So if we have a consistent level of volatility, and you know that we do, how do you know that we have a consistent, we have levels of volatility that like to express themselves? How do we know that? What was the recoup after 9/11? Pay attention. The recoup after 9/11 was here. Not 9/11. Sorry, I've been seeing too many videos on that post 9/11. Apologies, and hats off to all servicemen, all of the anyone who was affected by said tragedy. But and that would be another. And we need to look at that. It just flew out. But I've been seeing quite a few videos. For some reason, I've been being pushed those. But in terms of crisis, that was on my list of things to do. Should have mentioned it then. Just a bit of a faux pas. But I will say, after COVID, which a lot of people have compared, worth mentioning. We can go back to, and we will actually do that, and I'll do that between last night and tonight, taking a look at COVID. Then we would want to look at, it's a little bit even gun shy to say it, we have to say, but looking at we have to say it, the 9/11, when it's very, very, very relevant in terms of what's the maximum expression in terms of a recovery. That's the good thing. In terms of a recovery, in terms of the economic recovery, the market's recovery, we see a resiliency that is measurable, and that is also, guys, that is measurable and consistent. Take a look at this. If you're looking at post, and this is COVID, almost equally as difficult to really talk about COVID, and we're hoping that we don't get back into, not to buttress the conversation with COVID, but we're really hoping that we don't get back into complications with COVID. We really are hoping that just here at Bitcoin Spike and VIP Trader, we're really hoping that we don't have some complications incoming from COVID. We've heard from the president, I believe himself, saying that there's some sort of there will be another pandemic, something along those lines. I'm really personally hoping, and again, not to buttress this discussion, but I'm really hoping that's something that can be avoided. That would be really our best hope, that we could avoid such a circumstance. So we'll do the analytic on a preceding tragedy that was mentioned, but we'll also immediately bring into focus the specifics for the post-COVID, and nothing but sympathies and best regards for anyone who's been affected by anything. So when we talk about a major drop or catastrophe, it just doesn't go without saying, guys. Looking at the recovery, though, looking at the recovery just objectively on the price action for the NASDAQ, what do we have here? we have an equivalent move on the recovery, okay, post, we could just say, why don't we just say, in 2020, right? Let's just say in 2020, kind of keep us neutral in terms of neutral grounds, in terms of language, which I understand can be a little difficult online, right? So let's take a look at that, and that's unfortunate too. That's highly unfortunate as well. But looking at that specific 2020 crash, right? That crash in the markets, looking at the specifics here, measuring the amplitude move, do you see what we've done? We've literally recreated with a high degree of specificity, a measured move, boom, boom. We have recreated that specific incredible recovery that the market experienced. Thereafter, it got choppy with push, you see the patterns in play with a bull pennant, right? And this would be the ideal thing to consider if you're looking at the market for an opportunity for either a drop or an additional move up. You see some distinguishing characteristics now. And as we look at the tech sector, we would expect and hope that Bitcoin, that your other altcoins, that your cryptos guys would fall in line with that, along with Tesla and NVDA, that there would be a nice correlation for you to count on there. But looking at that, look at this, guys. In 2020, boom. Do you see the same move? Now, so there's a measured degree of volatility here for you to capture. Now, if we were to go down, what's the benefit? Pay attention. What's the benefit? Well, it's the difference between 77% now becomes, pay attention, now becomes 51%, right? 77% becomes 51%. You see the value in going lower, right? You see the value in going lower. And remember, it's the maximum that $1 on $100, just the same dollar, literally the same measured move, $1 on $100 is what? Is going to be 1%. $1 on $10 is 10%. So you're looking at 70% versus 50%. So if we were to, and I'll say this, in terms of the completion to the upside, we'd be looking at an additional move to the upside. Now the 70% becomes the 50%, which would become, as you measure this out and look at it, which would become the 34%. Uh-oh, hold on, right? So as you look at this, it becomes increasingly difficult to stack returns, right? It becomes increasingly difficult to stack returns. And we can look all the way back through the price action without hunting too much. And I'll do what I accidentally mentioned. We'll do that. We'll get into that. I think it'd be a great opportunity to see what is this consistent level of express volatility in the market. It's on my list of things to do. Maybe someone can help me with that project. I know some guys that are highly technical. And shout out to Andrew. Andrew, I heard that you were in saw that you were in the stream this morning. I missed the chat and just want to shout out to you. That's maybe something that you are proficient enough. You'd love to look into that and see what are these consistent measures of volatility, amplitude moves in the NASDAQ at least. And really, we call this, what is this? When I do alpha trader training, what do I call this? Derivative gain analysis, okay? Why do I call it a derivative gain analysis when I do alpha trading? Remember, alpha doesn't mean supreme leader of the pack. It means the percentage by which you beat the market. Okay, so if I do alpha trader training, I'm looking at derivative gain analysis, meaning what can I derive from the past in terms of the gain? Derivative, deriving this gain, deriving this gain from the preceding price action and applying it to the instant price action or anywhere else within that subsequent or preceding price action. Derivative gain analysis. You'll see these equivalences, and they're very important technically, extremely important. So we will be looking for additional patterning as such. This was a nice bull pennant. We're not seeing that structure per se. We're seeing a breakdown where we saw some strength precedingly. So we will be looking at that. I'll make some time in the back for you guys to see the results of whatever that analysis is that I'm doing. And if you feel inclined to do that analysis after seeing that on the screen, that would be great to see what all you're working on particularly. So looking at the momentum gauge, we decided to do a momentum gauge, make it front and center. Why? Because Tesla got really unruly this past week, and I'm like, all right, fine, I'm throwing up bull, I'm throwing up bear, everywhere all over the screen. It's gonna tell us and scream at us, essentially. If we wanted to, it can, right? We wanted to definitely be fully displayed. Where is the momentum? And these are just momentum gauges. They're not highly designed, really refined in terms of the design, but I'm like, I'm gonna print something quickly so we don't miss that move. So as you look into Bitcoin, make sure as you're dealing with even your high probability trades, right? An encyclopedia of chart patterns, Tom Bulkowski, pay attention to it. We trade prolifically with those guys, with those patterns and probabilities. As you're looking at the specific, even the high probability moves, make sure you don't shortcut the need here for whether or not it's I'll just say whether or not it's a bell pattern formation or another high probability pattern. You'll see some high probability patterns in Bulkowski, such as cup and handle, such as some additional that have a 100% profitability or 100% probability of being guys being profitable or success rate. That's because the actual design of the pattern is included essentially in qualifying for its consideration as a pattern. So I'm not crazy about the way Tom has done that, but that's the way he's chosen to do that, and he more than makes up for it. And he has his own rationale for doing it, so we don't really question it too much. We just go with it, just so that you know. So looking for the 75, 85% probabilities, still understand, and it's a great example today as we see that good, we have to say, guys, see just a really nice recovery by Tesla. As we look at Bitcoin and the differentiation here, what was the difference? The momentum. So solidify into that nice opportunity to trade very quickly. Wanted to celebrate a few of the trades in the back. Way to go. This is London with VIP Trader and Bitcoin Spike. We will be streaming in the morning. We will go get it again and again. And actually, I do have a bit of a trip in the morning. I'm gonna have to look at the time schedule. If we don't stream in the morning, I will cut a quick video for everyone in the back and get that to you so that you'll have something in the morning. I've got to make a little drive on into LA tomorrow. So I will be on the road again. As you know, guys, this is London with Bitcoin Spike and VIP Trader. Pleasure to be with you today. A nice volatility. Way to go. The name of the game is, guys, Tesla really is marking things out well, isn't it? We have to appreciate this. Between the weekly, between the monthly, this is it. This is the battle. This is nice. It's nice to be a part of the price action and see, for correlative purposes, how it may guide our Bitcoin trades. This is London with Bitcoin Spike and VIP Trader. We'll talk to you soon. Take care. Work on your technicals overnight. Without a doubt, work on your technicals. We'll talk to you soon. Take care. Bye-bye.